Good weekend. Ira Epstein with your weekend edition of your agriculture wrap-up. And this is for Friday, and we are Valentine's Day. I'm going to do this again. My brain's going faster than me. Good weekend, all. Ira Epstein with your weekend edition of your agriculture wrap-up. And this is for Valentine's Day, February 14th, 2020, and we're after 2:30 or so. So, what do we have? Well, we've got fears certainly about the COVID-19, that's the coronavirus. We have to be concerned, is there going to be further outbreaks? What are they doing? I heard that there's further lockdowns going on in Wuhan. The government has taken an even bigger step towards locking things down there. In Beijing, if you come in from abroad, you have to do a self-quarantine. But companies are gradually getting people back to work, and you see that in certain markets. Take a look at your coffee prices. You'll see that they've rallied about 10 cents, and I've been using that as one of the ideas. I'm not surprised to see copper in a bit of a sell-off, nor some of the stock market. Since the beginning of the year when this broke out, we're seeing risk aversion going into a Friday and then coming back on a Monday, and the market seemed to get a pop as things aren't quite as bad. So that seems to be where we're at. Now remember, on the weekend edition, we're going to look first at 1 week monthly chart, and then everything else is going to be for the bigger picture. So when we look at a monthly chart of soybeans, where are we stuck at? Where we've been? This is the 18-month moving average of closes. I like to call that the line in the sand because I look at it as the neutral number on a chart. When you're on it, you're neutral. Now you got a settlement of 893 3/4. You're over it, 10 cents away. Last week, if we could, or last month is the right way to say this, the market finished at 872.5, just under it. The month isn't over. It's only the 14th. We've got a ways to go, but you can see you're just sort of hanging where that is. When we come and look at a weekly chart, the market ran into a buzzsaw at the 945 level, slipped back, got a little cheap apparently at 870, and we're getting a bounce from there. When we take a look at the swing line study, the pattern is not a trend. You have a higher high, then a vertical drop to this low, came into the support area, and you've had a bounce. From this bounce, we're going to get an idea what the market's made of, and I wouldn't be surprised if you run into stiff resistance at the 100-week moving average of closes, starting at $9 up to $910.5. That's where I'm looking for the resistance. You hit the first level of it, or just about there. You miss it by a half a cent this week. I wouldn't be surprised if you have problems. Remember, we haven't seen China really stepping up and buying a lot of our soybeans just yet. When we look at the swing line, the first challenge of the swing line did find, they said swing line, Bollinger Bands. They found their support right here. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Typically, what I teach is that the first challenge on an upside or a downside when you hit it is where the market will find, be it the support or resistance. I think that's where the smart money takes some money off the table. I mean, doesn't mean they get out of all their position. They may have trailing stops. I don't know what everybody does. But I see enough bounces and enough times you hit it for the resistance or that to believe that that's the case. Now, when you get back up and you get into a resistance zone, all that means is this number is still very much in play. Momentum-wise, the market has sort of curved its downside. If we take a look, you can see how it was pointing lower here, and now it's sort of gone into a pause. So I'm looking at a market that's not trending, caught between the bigger picture of the sideways action. I read a USDA report from what they're looking for the next 10 years. Now, it's pretty rough to make a 10-year projection, but they think that you're not going to drift a lot, prices up or down, increased yield production, fairly constant demand for the products, but no reason to get huge spikes one way or the other. I'm going to say other than world events such as weather. Could be a virus on a crop, but barring that, people will eat. So I understand what they're saying. I'm still looking for the resistance up in this area. When we look at the meal market, here too we've got a higher high, lower low. The one thing that's fairly evident, you've had trouble because this is a weekly chart since last summer getting back to an upper Bollinger Band. When we come and look at the beans, that's not quite the case. You got there in October. Obviously, harvest time, we had some pictures that we were looking at that. In the oil market, you really did a vertical price drop. Once you hit this area of the 35-cent area, the market just fell apart, got down back to the 30-cent zone. Doesn't seem to want to hit the 100-week average. Resistance will be, in my mind, the 18-week average with support at that 100. Momentum is still down in this market. Now, in the corn market, today was a little disappointing. We keep seeing that China is buying grain on the world market. They bought a lot of Ukrainian corn. They haven't done much for the U.S. farmer so far. The market is caught here right at the 18 and the 100-week average of closes. What is the pattern? We've had one of higher lows, higher highs. I would not want to see 376 taken out. If you do that on a weekly basis, you're going to turn lower highs, lower lows, putting in play the possibility of the lower Bollinger Band coming in there. More or less what this market's really done is it's just going sideways right now. No big trend so far. In the wheat market, this was a disappointing week. If you look at the chart action, you've had a pretty consistent pattern of higher lows, higher highs. You'd hit the upper Bollinger Band. You'd back off, you'd stay over that 18-week average. What happened this week now is you fell down and broke that pattern. So now you have a higher high and a lower low. Momentum is turned down. You've turned away from the bullishness that the market had, is what I'm saying. I call the market now neutral with momentum down. The bias is still up, and we'll see what that 18-week average does. Can it support this market or not? But that enthusiasm is out of the market as I define it. In the sugar market, sugar often, I want to use the word often because the word always is wrong, has a seasonal that turns down at the end of February into April. We'll see what happens. This rally fits very well because from high prices you can get lower prices. That doesn't mean you've peaked yet. You haven't. You still have the pattern of higher lows, higher highs. But what this market has been doing is as it gets ahead of itself and it's run up, and it's had a nice run up. It had momentum locked in, bias up. It's gotten over that band, pulls back under it, and fighting a battle at that upper Bollinger Band. The importance of this is that markets only stay outside of the black Bollinger Bands 5% of the time. So the trend remains up on the longer term chart. Keep your eye on momentum. If it starts turning down, momentum often turns before price turns. In the coffee market, look at this sizable rally. You've gone from 97.40 and finishing out this week at 109.10. I know that I have been consistent on this break, and I told traders on this daily chart, there are times you don't want to play. You went from roughly $1.45 on the daily charts to 95 cents to get a bounce off of that. It's more than expected. First result of the resistance at the 100-week average, well, it didn't completely stop the market, but you're in this zone from here to the 100-day. Coffee shops are reopening. Starbucks doing a little reopening. Apple is reopened, I think, one of its 7 stores in Beijing. It's got 7. I might have opened one the other day. They're all limited time. But the fact that it's even gradual hours coming back, if people walk around shopping, they might stop into one of the coffee stores. In the cotton market, this has been a disappointing market. The factories aren't buying the U.S. products right now. And in fact, on the weekly charts, if you were to take out 66.75 and close under 66.90, you'd get lower highs, lower lows, the possibility of a projection down to 62.15. So what's the market right now? It's still in an uptrend. You've got the higher lows, certainly the higher highs, but you've got divergence. You have momentum pointing down. The bias is still up. And as I said, I always watch that momentum. I don't want to see that number I just said taken out if I were in the bull camp. In the cattle market, again, we've pulled back to this 18-week average, and we're fighting a battle there right now. If you take a look, you closed literally right on it. Was that the correction? That's what the market's asking itself right now. We know that we corrected from the 127.55, about 7 cents. Now the real question is, does our beef get a bid? As we move on into later in the week, next week and the week after, we're suddenly getting towards the March time frame. What happens? The cattle move back on pasture land. There's going to be a lot of questions that get asked. In the hog market, remember we were all saying, are they ever going to buy hogs from the U.S.? And I'm talking about China. Well, they haven't. On the bigger picture, you've got lower highs, lower lows. This is a weekly chart. This was the hope and enthusiasm about the U.S. signing the trade deal with China, and nothing happened. And you're right in the toilet on that from here. Still in the bear camp, hard rallies. You still have resistance between 63.97 and 66.80, but you've hit downside targets. Momentum, while it's pointing down, you don't look at oversold or overbought on these charts, but it is to the downside. So I'll be looking to see what happens. As we're getting later in the day, you can see how the stock market, which broke fairly hard, about an hour ago, has made back those gains. No surprise here. Traders are sort of evening their books up, trying to figure out what do they do for the weekend. And that's going to be the important thing because we're closed. And I'm talking Monday, President's Day. Electronic markets will be open, but not the meat markets or the grain markets. Just remember that. They have different ways that they do those. What I'm about for helping people is in the mornings at 5:30 or so, I'm recording a video covering 40 charts on futures. I'm talking the grains, the meat markets, the softs, what I'm seeing, and I'll give you updates at that time as to what's been happening, not only with the virus, but other events. We have plenty going on in Europe as well. What the idea here is a bit of touch of fundamentals to start your morning off, then the technical analysis of the charts with specifics that I can say, I want you to buy here, I want you to sell there, here's my idea. The charts will look just like these do right here. They'll be in black with more studies than you get on the YouTube. Way more, by the way. I cover every day the same sequence when I do this. And the reason is if you use the video on our website, as you pull the bar, the slide bar, it lights up and tells you the section you're in. We can't do that, unfortunately, for the videos that are on our mobile and all that, but it's still nice because you get there and you have an idea because you know I'm covering it. As you move through, you see the name of the chart, God, I'm in the area that I want. It's pretty darn simple. And yes, whatever subscription service you take, you get our free mobile application with it. So I think you'll find that interesting. To find out about this or to subscribe to it, it's pretty simple. Just go to our website, www.iraepstein.com, under the word research. It's all up there. Remember that I am including, for a limited time, free access to my Spider ETF video that will stop soon. This month. So you're getting that right now, something to take advantage of while that's going on. Again, iraepstein.com. You have a great weekend. I'll see you all come Tuesday. That's when we'll be back in the office. Take care.